Dollar Canadian dollar, long-term forecast for the week of January 9, fxempire.com. The dollar Canadian dollar fell originally during the week previously, but then found some footing towards the end of the session, or into the 5 sessions, and has actually formed a positive week. In fact, it is a hammer that extends down to the 101 level, which is starting to make a little bit of a name for itself as support. The oil markets are rocking this pair back and forth, but they are starting to realize that the uh, empty threat being thrown around by the Iranians to close the Straits of Hormuz, more than likely, it's just that empty. The U.S. Navy has made it abundantly clear that they are willing to intervene on that act, and with the Fifth Fleet being there in the Persian Gulf, probably wouldn't take too awfully much to sink the Iranian Navy as a whole. The Air Force would be gone as well, and then that opens the door for who knows what coming next. The Saudis have also promised to expedite their and ratchet up their production of crude oil if the Iranians attempt that. So, having said that, that pretty much kills the threat, anyways. The charts have been choppy, but with an upward bias. We think that this is the way forward as the oil markets will cool off, and there is still a flight to safety in the US dollar presently. The pair does tend to chop around a lot, so you have to be patient. You have to know that it could take a while for your trade to work out. However, having said that, the dollar CAD pair does tend to spike suddenly, and you may be 3, 4, 500 pips up before you knew what happened. With that in mind, only the most patient should take these longer term trades, but currently we are willing to buy pullbacks in this pair as it does look well supported.